The Samvat year gone by has been full of peak and toughs and twists and turns. It's a year when the world saw unprecedented events. Just when we were coming out of COVID crisis, a war hit us. Inflation is at a multi-year high. From high energy prices to challenging times on the food inflation front, it's been muddy waters for global economy. But for Indian markets, Ayesha, in absolute terms, in relative terms, it's been a flat year, but a good year.
It's been a flat year, but a good year. And I think what's most important is that the year has finally almost said goodbye to COVID, right? Last year, same time, we were not even in the studios. But two special gentlemen joining us today on this Diwali special of Roll the Dice. It's not only going to be all about serious market talk, but some fun and games as well. Manish, Chokhani, Hiren Ved, they need no introduction. Gentlemen, happy Diwali.
Thanks for having us and happy Diwali.
Happy Diwali to everybody.
And I remember last year, same time, we were still doing down the line Zoom interviews.
That's
so grateful, right? I think that is what this year has taught us, to be grateful for everything you have.
Yeah, I think that's the predominant sentiment. And I was sharing with my son as well, that imagine if you were a girl in Afghanistan, you're banned from going to school, or in Iran, you can't even, wear what you want to wear. If you're in Sri Lanka, you're queuing up for your petrol. If you're in Europe, you don't know if you'll have energy in the winter this time. If you're in Ukraine going about your own business, someone came and bombed you and you've run away. There's 6-7 million people who are just displaced from their homes. So a lot to be grateful about. And all the things Nikunj said at the beginning, if you had told me all these things will occur in the world, I think we would have said the markets will be down 20%. So the fact that we've at least held steady, and even in this year, there have been great winners, which you had a good chance to take. I think India has come out of this really, really well.
Yeah, that's the thing, right, Hiren? This year has been of Indian market resilience. I mean, whatever has gone down in the world, all the volatility, all the weakness, all the news flow, India has emerged strongest of the lot.
Yeah, and what I find amusing is that, people can't digest the fact that India has outperformed the world, because we still have the mentality that, and I'm not saying it in any condescending manner, in the sense that we all understand that the world is global and, capital is mobile. But there always will come some time, and that time has come, where we can stand on our own feet because of our own fundamentals and our own opportunity.
When Manish Chokhani historically has invested, he has followed a simple checklist, which is size of the opportunity, which is profit pool, durability and sustainability of the management and the business, and attractive valuations. That's your template. Absolutely. I've painted the template. You'll have to fill in the colors now. Where do you see this combination?
See, it always starts obviously with a valuation.
Do you remember, sir, what you said?
I'm deeply obliged. Yeah, straight to where the puck is. But I mean, in a very simplistic sense, the puck is moving towards Indian manufacturing. Current year, of course, financials, I think everyone in the market will agree, is the place to be. Tremendous money is to be made in Indian financials. Balance sheets have never been better. All of that is kind of given when we talk about it. But where the puck is moving to is this massive opportunity for Indian manufacturing to finally come off scale, solves the need of the world, solves the need of the country. I don't see as yet so many of my friends in industry being so enthusiastic to say we will put big capex. And indeed, the FM has also been crying like, why is the capex not coming despite the tax breaks and everything? But when you see what's going on in Europe, where the factories are shut down, there's no energy. And a lot of their industries had basically got offshore to China, and they don't want to deal with there. So it's no longer China plus one. It's like, if I don't want to deal there, where do I go? So we are still thinking of ourselves as number two. When we start thinking of ourselves as number one in whichever field it may be chemicals, it may be defense, it may be autos, the scale of expansion possibilities is dramatic for people there. And you'll remember that last crisis, 2008, we had spoken about Vivek Chand Sehgal in Motherson. In that crisis, this company went 10x. In this crisis, you'll find few more people like that, and don't ask me the question today because we are now going and meeting people also post-COVID, to see who's got it in them to imagine it and do it at a scale without blowing themselves up.
So whom all have you met?
I was just going to ask you, so who are you meeting?
You need to crack his challenge.
Yeah. So this question goes to Hiren now.
No. But you know, Hiren, I recall you were right here with us in the studio when the HDFC Bank amalgamation news broke. What's happening in banking is pretty interesting. I mean, who would have thought that the biggest underperformers of the year would be HDFC Bank and Kotak Bank? And look at the stars in the making are already there. IndusInd, Axis, or the bottom-up plays that you're seeing within the PSB banks. Is the banking story intact? They've had a great last few quarters, but are they still good to go for the next year too?
I think there's no doubt, right? I mean, in the past, we've always grappled, okay, no PSU banks because private sector banks' balance sheets are better. But this time, everybody is starting on the same start line, right? And that's because we went through a massive deleveraging and provisioning cycle. And then during COVID, we had another provisioning cycle and everybody raised capital. So now everybody is well, you know, they have all their immunity and the protein and they're ready to run, right? So I think you got to pick and choose. There will be, and please understand, this is going to be a marathon. So who runs the first 10 kilometers is not going to matter. You know, you may have, and as it always happens in the Hindi picture, that the hero always comes in the last 5 kilometers and makes it to the finishing line, right? So to your question on HDFC or the others which haven't done well, in financial services, it's a marathon. There are a few who have gotten off to a great start. There are a few who are running at a steady speed. And maybe they'll pick up at some point in time.
So who is the picture ka hero? Who's going to win the last lap and win the marathon?
This time the movie is different. You got to wait till the end to figure out who the hero is. No, but I think, but I must say one thing that, you know, one of the thought processes that we had, and, you know, it's at least played out till now, is that when you traditionally looked at banks or lenders, right, you would look at, you know, credit capabilities, liability franchise, you know, asset mix, yield, the quality of the management, especially the leader. I think all of that still is relevant, but you need to check one more box, and that is how good are your digital capabilities. Because post-COVID, this industry has changed, right? You have branches, but at the same time, people may not necessarily be going to branches. Everything happens on an app. So if you can't give a great digital experience to a consumer, you are likely to lose a few customers, right? So I think that when we have looked at the entire landscape of lending and financial services, we said, okay, all the traditional parameters tick, 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 but add one more. How good is your digital experience? And I think some of the bigger franchises today are struggling a little bit. And maybe the market's taking cognizance of it. Maybe they'll get it because it's not that you can't crack it. It's not it's not a rocket science, right? You can crack it. But I think it's an important variable to keep in mind because, you know, the fintechs are coming. You may not bet on fintechs because they may not make money, but they'll certainly disrupt parts of your value chain. And if you're not ready, you are likely to lose your competitive edge, right? So I think that is one differentiator that I think all investors should keep in mind when they go headlong into lending or, you know, financial services.
Fair point. Manish, exactly a year ago, the thesis in the market was everything is digital, everything will become digital, and if you cannot become digital, you have no business to be in the business. But the template has changed. Suddenly value has made a comeback. ITC at 10 record high, NTPC up more than 50-60% in last
Whole
1
India.
year. Whole India.
Most PSU.
All the ESG themes went out of the window.
Exactly.
Yeah.
So this market has taken a 180-degree turn in less than 12 months. What is the template for next couple of years?
Nikunj, what I feel is what I alluded to earlier, that you had a 30-year cycle where the world went unidirectional, that there is great USA and they will rule the world. And post 2008, the Fed has your back. And in a way, they tested out MMT because everyone printed. And already, even when US is saying that we are going to hike rates, in Europe, they've abandoned it. UK, of course, abandoned it. Japan has abandoned it. So the power of the central banks has been taken away by the politicians. And even in the US, it's my belief that Mr. Powell is not going to be Paul Volcker because the current president is not Ronald Reagan. So when they get to a threshold of pain beyond which people can't bear, math will change. And when you all are geared up 325% of GDP is your debt ratio, 300 basis point increase in interest rates is a 10 percentage point increase in interest cost to the economy, of which 3% if it goes to US fiscal deficit, 3% goes on corporate balance sheets which were leveraging and doing buyback of stocks, 3% goes into individual balance sheets which you have to pay more rent or more credit card bills. It's demolishing. Obviously, it comes with a lag. So we haven't yet seen the effects because it's only been 6 months when the rates have started going up. If this pain continues over next year, what happened in UK is going to recur in other countries of the world, which means cost of capital has come back to being center stage. And what the markets, I feel, have started doing is already rewarding you on that basis. And hence, if you saw even last year that unidirectional bet that you could have bought pharma and made money in Sun and Cipla, but you were losing it in divis. You could have bought, like you said, the utilities, or you could have bought autos. Most strangely, I found it was Mahindra and TVS, which people don't usually like. And on the losing side was Tata Motor, for example,
Maruti,
which had EV and everything built into it. So the market is getting more discerning with cost of capital and value, because when money is free at 1% and 2% rates, price earning multiples don't matter. It's all about terminal value. When cost of money starts going up, you start looking for value, and the shift traditionally has happened. If you go back to even 2000 when all the TMT stocks were bubbling, the shift which happened even then was money came back then to all the, even last year in fact I can HAL, BEL, NTPC, Power Grid, all these have performed because they started from such a bombed out valuation and despite privatization not happening. So if, for example, this year you do manage to get Concor off, let's hope we get IDBI off and so on, maybe people start imagining that a lot of privatization happens and this PSU pack continues to keep running then.
Before we take a break, can't help but ask Manish Chokhani to sing for us how the year gone by has been.
This is new nowadays.
Yes, it is.
So, maybe the most appropriate thing considering how many investors came into India and seeing what was going on in the world and in line with what he described was Tumko dekha to ye khayal aaya. Zindagi dhoop, as in the whole world is suffering from intense heat.
Harsh heat, yeah.
And India is the place where you're getting nice cooling
Ghana chaya.
Ghana chaya.
Now sing it for us.
तुमको देखा तो ये ख्याल आया जिंदगी धूप तुम घना छाया.
Globalization seems dead.
Yes.
Inflation is back. You've got to live with it, right? The crude is never going to go back to 50, 60 or, whatever have you. What wins in this case?
So you realize in India, we suffered over the last decade. We didn't really perform because inflation was dead. And Indian industry is used to growth. So we want some inflation. The worker feels happier. So we may talk in the studio about real rates and real incomes and real top line and real GDP. But the person today, I don't think in India when you go out and say the rupee is 82 and your real value of your wealth and your income is gone, if the person gets a 10% salary hike, they're going to be far happier than saying, overall you've got deflated. And when you travel outside, actually not only is your rupee down, their prices are even higher than what you had paid. So actually your net purchasing power has fallen. So some amount of inflation in India, I think, is necessary for this country to feel happy. And I think the bands for everyone, in the Western world, the rates, that 2% band, I think will end up moving closer to 4. And our band, which used to be 4 to 6, will also probably be on the upper end rather than on the lower end. So the template comes back to that you will want to be buying companies which can then, pass on some price increases. There is adequate demand. And because we are currently still running at about 70-75% capacity utilization, you still haven't seen manufacturing inflation, which is why rightly the RBI already knows by putting interest rates up anymore, they're not going to dent oil prices or consumption in India. So I think our rate cycles also maybe one more hike and I think we're going to be done. And then the currency has to bear the brunt this way or that. So let's see how it plays out.
Hiren, what were your top 3 holdings same time last year and what are they now?
They
I'm
haven't
keeping it very
changed.
simple this Diwali.
They haven't changed, frankly.
So what were they?
Well, they were Tata Elxsi, they were Bajaj Finance and ICICI Bank.
And you still think that these stocks have a long way to go?
Yeah, I mean, we don't change things around because a quarter or a narrative changes, right? I think you hold on to stocks for multi-year cycles unless you genuinely believe that either the external environment is completely changed or the hypothesis is turned on its head, which has not happened, frankly. So I think, but that may be the top 3, which hasn't changed. But I do agree and concur with Manish that instead of deglobalization, I would like to use the word reglobalization, right? So I don't think globalization goes away, but I think the players will have to. There is a little bit of a musical chairs that's going to happen, and it's India's time to have the chair, right? And I think that, we have all the elements in place to get manufacturing. One, and most important, as he alluded to, we have labor, which for whatever reason, the demographics are bad. And on top of bad demographics, you just give free money to those people, so those people don't want to work anymore, right? We have energy, right? We are now fixing logistics, right? We have capital and we have entrepreneurship and we have an opportunity open to us because one large manufacturer to the world is now no longer such a great attractive source for people. And I think that it's quite surprising, but we always had the talent. As Rakesh Bhaiya used to say, India is a runner without shoes. I think now India is a runner which has shoes, right? So it can run much faster. So I think today manufacturing is a reality. We had a lost decade of manufacturing, frankly, if you ask me, from 2011, ever since the scams broke out, the 2G and the coal scam. I think the investment environment soured. Plus, we were coming off a big hangover of leverage in corporate sector. That's washed off. So you had deleveraging. It took us 10 years to wash off the hangover of leverage. You now have a far more efficient system in terms of GST. You have digitization, which will actually help improve your working capital cycle because money can move faster, right? And we haven't yet, we are underestimating the power of productivity improvement because of the digitization that we've done. Because one of the reasons why America was great is capital, innovation, and productivity. I think capital is available now across the world if there is a good idea. But I think you will see a massive productivity cycle that will be unleashed in India. Because earlier when I used to give salary to my help, it would take 7 days for him to get the money to his parents. Today he can zip it on the same in the same minute,
second, yeah.
right? Which means that they can spend it today, which means the shopkeeper gets the money today. So I'm saying we haven't yet, because we went through COVID and activity levels were low. As we get out of COVID and activity levels jump, the real multiplier of that productivity that will be unleashed will be there. So I think that...
But your top 3 holdings capture financials. They don't capture manufacturing. Or I'm missing on something.
No, then you have to go to the top 10, right? So you have to also understand that, stocks also, they become top not because I allocate at cost, but they also compound at whatever rate they compound, right? But I genuinely think that, the lost decade of manufacturing, from that lost decade, I think we're going to have a manufacturing renaissance in this country. And India has shown it. I mean, you created generic pharma champions in the mid-90s, the Suns, the Ciplas, the Ranbaxys of the world, which went and conquered the world. I think that's happening in specialty chemicals, it's happening in auto components, in two-wheelers. Already some of our champions are selling 50-60% of their volumes globally, right? So I don't see a reason why and then I think the whole Atmanirbhar Bharat, and I think the world realized during COVID that for very critical things, you can't rely absolutely on somebody else, right? And I think there is now a greater realization that you need to build capacities or at least domestic capabilities in many areas. And that's why you see today the two biggest, one of the two large groups in this country are now thinking of manufacturing semiconductors. Because if you want to be a leader in electric vehicles or in the new energy business, you better have your supply chain in your control, right? Secondly, I think that in decades, and this doesn't happen, very often, but two industries globally are going to go through a massive capex cycle because we are moving, one is energy transition. So we are moving from old to new energy, right? That itself will unleash a global capex cycle. The second is in transportation, where we are moving from traditional fuels to electric vehicles and hybrid, right? And these are massive industries at a global scale. Whenever that happens, it's not just the end industries, but there's a whole ecosystem which gets developed. So for example, when Maruti and Hyundai came to India, they created 50, 60, 70 auto ancillaries who grew with them. I think something similar will happen. And then on top of that, there are two large industries which is very India specific. One is defense, where we are now wanting to get more manufactured in India. So while the BELs and the HALs and the BDLs of the world will grow, there is no doubt, but they in turn will create an ecosystem of private players which will feed into the supply chain. And that's going to unleash another trend of manufacturing. So I think there is a great opportunity that we have, and you'll have a lot of, winners. And the beauty is that Indian entrepreneurs are great, right? So for example, the auto component companies who are primarily only automobile faced, today they've started making for non-auto, for renewable energy. They've started supplying into the EV value chain. Your skill sets are generic, but you can apply it to several other industries.
And to defense as well.
And to defense as well, right? I mean the Bharat Forge and the Sundaram Fasteners and several like those.
So yes, closing thoughts.
आने वाला पल जाने वाला है हो सके तो इसमें जिंदगी बिता दो पल जो ये जाने वाला है.
But the one which really we would be requesting both Hiren and Manish to chance their arm is Roll the Dice. Okay, there you go. So this one is for Hiren. And it is number 2, which is one IPO you wish you are not invested in, purely as an investor.
Luckily, I haven't invested in any IPO which has bombed, right? So I can't say that because I generally tend not to invest, but the ones that I invested in have made money, luckily.
Yes.
Number 6.
Okay.
The question is CEO I admire. That's a simple one.
Chandra, by far. He's turned the whole group so massively. Fantastic.
Okay, then your turn. Okay, there you go.
Then the question is, when will Sensex hit 1 lakh? He got 1.
When will it hit 1 lakh? I think 2025.
That's 2.5 years.
Okay. Rolling the dice next, and it's number 3. Manish, the question for you is one stock I wish I had bought, but didn't.
Oh, last, we are not too simple. Adani Enterprises.
Who would have thought it would be a nifty company?
Fantastic.
Yeah.
Ready? Biggest mistake or biggest investment regret? No cheating, this actually came.
He's actually getting the tougher questions, have you realized?
Asking my dad to sell Bajaj Auto when Kinetic Honda was doing well, because I was still young and inexperienced.